Hello viewer, welcome to Chachanomics Money Talks. Today we are going to talk about 3 fundamental ways of saving and investing. In our previous session, we talked about the 4 common ways of saving your money, whereby we talked about opening a bank savings account, M-Shwari lock savings account, Chama and Sacco contribution, where we said the 4 are convenient, they are safe, they are accessible, and they over returns of about 7% per annum. We say that money is a tool or a vehicle that can take you wherever you want to go, but it cannot replace you as the driver. And to the first fundamental way of saving and investing your money, that is buying unit trust. A unit trust is a pool of funds collected from investors or people's savings and invested in what we call diversified portfolio, that is in market instruments like shares, property, bonds, and so on. A unit is a fraction costing 100 shillings. The minimum unit, for example, you can buy at 10, whereby each costs 100. Therefore, you need around 1,000 shillings. And the unit trusts are provided by professionally run fund managers, which are regulated by the Capital Markets Authority. They come in different forms. We have the equity fund, balanced fund, and the money market fund. Money market fund is the most preferable unit trust for emergency, and in fact, it offers low risk but a good return. In this case, if you have money and you have set it aside for emergency, unit trust is for you because it gives 7 to 10% returns. The next one is government securities. Government offers securities in the form of treasury bills or treasury bonds. Treasury bills range from 3 months to 12 months. Bonds range from 2 years to 30 years. Government securities are low-risk investments whereby you lend the government money with an promise of interest that is in the form of, let's say, 10% average per annum. Government securities are safe and secure. In fact, they offer good returns. For cases whereby you have money for emergency, you can put in government security like treasury bills. One disadvantage, you have no control over the returns. The third one is the trading in shares or stocks. A share is a percentage of ownership of a company. This percentage of ownership is in the form of units or shares that you buy. Shares that are listed in the Nairobi Securities Exchange, they vary according to various market forces or economic trends. Like now during the COVID-19, the share prices are very low, and this is a good time, the best time for you to buy shares. Shares are advantageous because they are high-risk investment with better returns, better than government securities, better than unit trust. For you to trade in shares, you need to open an account with one of the brokerage firms, and the account, we call it CDSC account. Next time we are going to look at real estate, and real estate also offers better saving and investment returns. Thank you, and stay tuned to Chacha.